So, earlier in July, Tesla reported 384,000 total vehicle deliveries for the second quarter of 2025, a 14% decline from the second quarter last year, and the second straight quarterly decline. A few weeks later, during the earnings call, Tesla poured some salt into their wounds and delivered pretty disappointing financials, most notably free cash flow of $146 million, after analysts had expected $760 million. Now, if you're still holding Tesla stock, don't worry, there's still some good news. You can now go to Tesla's new diner in LA and get a variety of American comfort food, including 4 strips of bacon for $12. Oh, and don't forget, the food comes in a cardboard Cybertruck box as well. Some tweets started going viral regarding the food at this brand new Tesla diner, specifically this one. Holy shit, the epic bacon at Tesla diner looks amazing. To be fair, it does look really good in that picture, but then a guy conveniently named Bacon Noticer quoted that tweet with a picture of what the bacon actually looked like in person. $12, by the way. Diving into more of the financials from quarter 2, Tesla's 384,000 deliveries is the lowest quarterly delivery figure since quarter 3 of 2022. Taking a look at this handy chart that I totally just nabbed from CNBC, it's not unusual for Tesla to experience their highest delivery figures in quarter 4 and to then start the new year on a slower start. What is unusual though is that Tesla's deliveries at this time were, again, way lower this year than they were in 2024 and 2023. Additionally, if we take a look at their quarterly revenue, it dropped to $22.5 billion after analysts had expected $22.74 billion. This figure was also 12% lower than this time last year when Tesla reported $25.5 billion of revenue. Jumping over to the shareholder deck, we can see that operating income was just $923 million, down 42% from this time last year. And we gotta revisit what I mentioned previously, the 89% drop in free cash flow, which resulted in Tesla reporting just $146 million in free cash flow. I mean, objectively, this is a pretty concerning metric. And the thing is, capital expenditures were only up 5% year over year, so it's not like they were spending a massive amount more compared to last year. More than likely, spending was slightly up because they decided to source what must be the most expensive pigs in the entire world for their bacon at the Tesla diner, which would explain why it's so expensive. During this earnings call, Tesla's stock actually temporarily rose in after-hours trading. For what exact reason, I have no idea, but it eventually reversed and quickly fell into the red, closing 8% lower the day after the earnings call. Now, Tesla is struggling for a couple reasons. For one, the big beautiful bill recently passed by Congress ends the federal $7,500 EV tax credit at the end of September. Additionally, the uncertainty regarding tariffs has caused Tesla to shift aspects of its supply chain. We probably could have a few rough quarters. I am not saying that we will, but we could, said Elon. In my personal opinion, and you're free to disagree and comment what you think, but I think it's impossible to say that Elon's political antics within the past year helping to elect President Trump and heading Doge have not soured at least some potential Tesla customers away from buying a Tesla. At the end of the day, taking such a hard stance against such a large portion of the population's belief in such a public way like Elon did is not a good thing for business. The degree to which this has caused the slump that Tesla finds itself in right now is up for debate. However, again, I think it's impossible to say that it hasn't caused at least a small portion of Tesla's downturn. Please make sure to like the video and subscribe if you enjoyed.